Welcome back to the Daily Crypto Roundup. Today's session reflects a market that is still trying to find its footing, not through panic or capitulation, but through hesitation and recalibration. Across crypto markets today, the dominant tone has been one of cautious stability rather than aggressive risk-taking, with prices holding steady and traders watching closely for confirmation rather than rushing to front-run the next move. Bitcoin has spent much of today modestly higher, trading around the $90,000 area, while Ethereum has been slightly softer. Importantly, this has not been accompanied by signs of distress. The broader market capitalization has remained relatively stable, and there has been little evidence of forced selling or widespread liquidation pressure. What we're seeing instead is a market that appears to be pausing, assessing, and waiting. This kind of behavior is often misunderstood. Sideways price action following periods of volatility is not necessarily a sign of weakness. In many cases, it reflects uncertainty about timing rather than direction. Traders are aware of competing signals, some supportive, some cautionary, and are choosing to reduce exposure rather than make aggressive bets. That hesitation is the backdrop for everything else happening today. One of the reasons this cautious tone matters is because Bitcoin is currently sitting near a level that some analysts consider structurally significant. According to data highlighted today by CoinCodex, Bitcoin is testing what they describe as a long-term support zone that traces back more than a decade. This kind of multi-year trend line is not something short-term traders typically trade against lightly. Support levels of this magnitude are not precise price points. They are zones where behavior matters more than exact numbers. What analysts are watching is whether buyers continue to step in gradually, absorbing supply, or whether the market begins to show signs of cracking under sustained pressure. So far, the behavior today suggests stability rather than breakdown. There has been no acceleration lower, no cascade of stop losses, and no surge in selling volume. Instead, Bitcoin has remained range-bound, with buyers and sellers roughly balanced. That balance does not guarantee an upside move, but it does suggest that long-term participants are not rushing for the exits. Structural support levels tend to act as psychological anchors, particularly for investors who view Bitcoin through a multi-year lens rather than a short-term trading framework. At the same time, more optimistic voices are making themselves heard. Today, Fundstrat's co-founder Tom Lee reiterated a bullish outlook, predicting that Bitcoin could reach a new all-time high by the end of the month. His forecast suggests a potential rally of roughly 35%, pushing Bitcoin beyond its previous peak above $126,000. This kind of prediction naturally attracts attention, especially during periods of consolidation. Bold targets stand out when markets feel indecisive, but it's important to place this forecast in context. Tom Lee's view is not based on intraday price action or technical patterns alone. It reflects a broader thesis about liquidity conditions, institutional participation, and macro alignment over the coming weeks. Whether or not this specific target is reached is almost beside the point. What matters is that influential analysts continue to frame the current market as transitional rather than terminal. In other words, consolidation is being interpreted by some as preparation rather than exhaustion. That divergence in outlook, caution in price action, optimism in forward projections, is a defining feature of today's market. Regulatory developments are also contributing to this sense of transition. In the United States, attention today has focused on reports that Senate negotiations are continuing around a crypto market structure bill, with a markup expected later this month. This is not a headline-grabbing announcement, but it is a meaningful one. Crypto market structure legislation aims to clarify how digital assets are regulated, which agencies have authority over which parts of the market, and how firms are expected to operate. For years, the absence of this clarity has been one of the biggest obstacles to broader institutional engagement. Today's reporting suggests that lawmakers are moving closer to concrete action. Proposals under discussion include limits around stablecoin rewards and clearer definitions for how financial institutions can interact with crypto markets. These are not cosmetic details. They shape how capital flows, how risk is managed, and how compliant firms can scale. Markets tend to react not just to laws being passed, but to the perception that a framework is forming. Today's headline reinforces the idea that regulation in the US is shifting from ambiguity toward structure. even if the final shape of that structure is still being debated. Alongside legislative developments, ecosystem-specific events are also on traders' radar. Today it was confirmed that the Optimism ecosystem will host an AMA on X on January 12th. While this might seem minor compared to macro or regulatory headlines, community events like this often influence sentiment, particularly in governance-driven ecosystems. The planned discussion is expected to cover topics such as token buybacks, governance decisions, and development roadmaps. These are the kinds of issues that long-term holders care about because they speak to sustainability, incentives, and alignment between developers and the community. Even without immediate price impact, events like this shape expectations. They provide insight into priorities, strategy, and execution. In markets that are otherwise lacking strong directional signals, clarity from project leadership can temporarily fill the void. Ethereum, meanwhile, continues to sit at what analysts describe as a decision point. Today's commentary highlights the tension between downside risk and the potential for a rebound. On one side, there are bearish technical patterns that suggest vulnerability if broader market sentiment weakens. On the other, there is the possibility of upside pressure if shorts are forced to cover, or if broader risk appetite improves. This kind of setup reflects uncertainty rather than conviction. Ethereum is not breaking down decisively, nor is it launching higher with confidence. It is reacting to the same forces shaping the rest of the market: macro expectations, regulatory signals, and relative positioning. Decision points like this are often uncomfortable. They invite over-analysis and emotional trading. But they are also where markets gather information. How Ethereum behaves here will likely depend less on its own internal dynamics and more on how broader conditions resolve over the coming days. Those broader conditions are very much in focus today. Macro forecasts for the week ahead suggest that crypto and traditional markets alike will remain sensitive to inflation expectations, central bank signaling, and shifts in risk sentiment. The window between January 12th and January 16th is being flagged as particularly important, with multiple data releases and policy cues expected to influence direction. This macro sensitivity reinforces the idea that crypto is no longer operating in isolation. Digital assets are responding to the same forces that move equities, currencies, and bonds. For traders and investors, this means paying attention not just to on-chain metrics or protocol updates, but to the broader economic calendar. Periods like this often produce choppy price action, rather than clean trends. Markets react to headlines, then reassess, then react again. Volatility increases, but direction remains elusive. Today's relatively calm behavior may simply reflect positioning ahead of a more eventful stretch. Policy developments at the state level are also adding to the mix. Today's news included reports that Florida is reviving a legislative proposal to establish a state-managed Bitcoin reserve. This follows similar discussions in other U.S. states and reflects a growing interest in treating Bitcoin as a strategic asset rather than a speculative curiosity. While such proposals face political and logistical hurdles, their symbolic value is significant. When state governments explore holding Bitcoin on their balance sheets, it signals a shift in perception. Bitcoin is being discussed not just as an investment, but as a potential reserve asset. Even if these initiatives move slowly or fail to materialize in the short term, they contribute to a broader narrative of institutional and governmental engagement. Markets tend to respond to these signals incrementally, rather than all at once. Narratives also matter at the asset-specific level. Today, XRP continued to attract attention, despite the broader market remaining relatively calm. Commentary from analysts and coverage by mainstream financial media have contributed to a sense that XRP remains a focal point for 2026 narratives. This attention does not necessarily translate into immediate price moves. Instead, it shapes expectations. Assets that remain in the conversation during quiet periods often see heightened reactions when catalysts eventually emerge. Narrative persistence can be as important as headline frequency. Finally, today's roundup would be incomplete without addressing ETF flows. Reports today noted continued outflows from Bitcoin ETFs, but also suggested that the worst of the selling pressure may be easing. This combination points toward a transition phase rather than outright capitulation. ETF flows are a useful sentiment gauge, particularly for institutional behavior. Sustained outflows often reflect de-risking, while stabilization can indicate that selling pressure is being absorbed. Today's data suggests that while caution remains, panic has subsided. This fits neatly with the broader picture painted by today's headlines. Markets are not euphoric. They are not collapsing. They are recalibrating. Taken together, these 10 stories describe a market in pause mode, watching long-term support levels, digesting bold forecasts, tracking regulatory progress, and preparing for macro events. It's a market that feels uncertain about timing, but not about relevance. The absence of drama today is itself informative. It suggests resilience. It suggests that participants are thinking in terms of weeks and months, rather than hours and days. As we move forward, the question is not whether crypto survives this phase, but how it emerges from it. The answers will come not from a single headline, but from how these themes interact over time. That's where we'll leave it for today's Daily Crypto Roundup. Drop your thoughts in the comments, smash like, follow for the next update, and we will see you at the top.